Okay, good morning, everyone. Welcome to our CalEITC webinar. We're just going to give 1 minute for folks who are still calling in and logging on. Thank you so much for joining us this morning. All right, good morning, everyone. Welcome to this morning's webinar, California Earned Income Tax Credit 101, Tax Credit Put Cash into the Pockets of California's Transition Age Youth. We are so thrilled that you could join us today. So folks are still joining in, but I would like to give special thanks to our presenters today who are joining us to bring us accurate information and helpful resources that will help transition age youth and their supporters file their taxes free of charge and receive their full cash back refunds. We do have folks from the Franchise Tax Board from Golden State Opportunity, Grace Inc., and Burton Advocates for Youth. And just as we're allowing more and more folks to join the webinar, I just want to go over some of the logistics. So as folks continue to call in and join us, I'd like to cover a few things that you can do using your control panel of the webinar. One thing I want to share is that today's presentation audio will be posted on our website using the link that's in this slide. And our written California Earned Income Tax Credit Guide can be found here under Publications. We also encourage you to submit all of your questions live by clicking on the questions panel displayed here in the control panel. And take a moment now to download today's handouts. The handouts include the webinar slides, our California Earned Income Tax Credit Guide, some of our posters that you can display to spread word about the Earned Income Tax Credit and tax filing preparation services, and some of the fact sheets that are specific to transition age youth. So feel free to take a moment to download those links, post any questions, and prepare yourself for the webinar. As folks are downloading their information and preparing themselves, I do want to point out our agenda. We have a lot of critical information to cover today that we believe will help lift young folks out of deep poverty and help them understand the tax component of their financial health. We have speakers who are going to talk about what it's like filing for the first time, the second time, some of those barriers that can come up. We do have all of the background on the California Earned Income Tax Credit, the Federal Earned Income Tax Credit, and the Young Child Tax Credits, that we want to give those details, some important filing information and deadlines, and just how to get some help. Then we'll go into some specific scenarios that deal with transition age youth, different sort of situations such as experience in foster care, juvenile hall, with immigration, being in a transitional housing program, being a student, and we'll cover all of those kind of specific scenarios that can impact how you file your taxes. And then we'll go into how you can help transition age youth claim their full Earned Income Tax Credit, the California Earned Income Tax Credit, and other refunds that will help lift them out of poverty. We're going to be sharing a lot of our resources today that are available to help you do that, that can be trustworthy information to help push this forward. So now that folks are just joining into the webinar, everybody's set up, everyone has their handouts, I'll really get started with the content. So my name is Anna Johnson, and I'm the Senior Policy Associate at Burton Advocates for Youth, focused on housing and health policy. The Earned Income Tax Credit and tax filing is part of our health policy, as financial health is really important for transition age youth. I'll be framing our CalEITC campaign, which is an important part of that health policy advocacy, and introducing the various panelists on today's webinar. So first, I'll get us started with our campaign. The financial health is part of 8 dimensions of wellness described by FAFSA and CDSS. Money and financial management is one of those 8 dimensions of wellness that every human being needs. It means gaining independence, getting a job, managing your money and credit, accessing supports and resources. And filing taxes is a critical skill set and aspect of money management that all transition age youth will be learning. The California Earned Income Tax Credit is a critical resource that most transition age youth can benefit from. And our tax process is not transparent. It leaves a lot of questions for first-time filers. And without accurate information, transition age youth may pay for services or miss out on their refunds if they don't have support, guidance, and help overcoming some of those barriers that can come up. And they may not file because they're just not aware of the benefits of filing. They may be told, you don't have to do this, and not understand that they could, in fact, get a sizable refund. So to help transition age youth and their supporters better understand the tax filing process, we have updated our 2020 California Earned Income Tax Credit publication that will walk you through the steps and resources that they need for filing their taxes. The publication is right in the handout section of the control panel, so you can download it now. It's also on our website. And we know that just providing a reminder or social media is just the first step to helping Tay overcome the very real barriers to tax filing, such as a lack of information, documentation, or transportation to those free tax prep services. And that's why we've developed our pledge and campaign to equip you to support transition age youth in overcoming those barriers that prevent them from receiving their full tax refunds. And I'm here to support anyone who takes that pledge. I'll be connecting you to resources. I'll be checking in to see how the tax season is going, if issues are rising, how to really benefit from the work that others are doing in the field to expand the opportunities that we have here, and to help bring free, accurate, trustworthy information to young people as they're filing their taxes. So just a few things that are new about the California Earned Income Tax Credit. Since 2018, the California Earned Income Tax Credit was expanded to include young adults age 18 and older who do not have a child. So new this year is actually the Young Child Tax Credit as well for young folks who do have at least 1 or more children. They can get a credit of $1,000, and Jason is going to cover both of these later in the presentation. We're just thrilled about the budget expansion to include these credits for youth who need this financial boost. It can really make a difference in their total fiscal picture and their total earned income over the course of the year. And so why do we need you? California is home to 3.8 million transition age youth who are in college, extended foster care, who might be experiencing homelessness, who are young parents, and these are newly eligible for these tax credits with this expansion. So they may not have known about them last year when that first year expansion occurred. They can also update last year's tax return once they have this information. So we know that they need your help to successfully gain this financial health skill set. Anything such as mentorship, direct support, transportation assistance, preparation with documents, and more are what really makes a difference in uptake of the Earned Income Tax Credit. Now, filing taxes can significantly increase the income of transition age youth. With the newly available tax credits, transition age youth with a young child who are working can see a large increase in their total income. So using an online tool, a calculator that Morgan's going to talk about later in the presentation, I've put in the average amount that a foster youth age 21 in extended foster care would earn, and the average undergraduate earnings of a working student. And I put that into the calculator to see, what could they get if they have 1 child. And as you can see, this can mean a 34% increase in their total income, or a 53% increase in their total income, including the federal Earned Income Tax Credit, the California Earned Income Tax Credit, and the Young Child Tax Credit. Now, they may be eligible for other sources of tax credits and refunds as well, and they'll learn that as they file their taxes. More of this information can be found in our guide. So right now I want to hand it over to Kisa Holani. And Kisa is a student at Modesto Junior College, and her goal is to transfer to Fresno State and work towards a master's in macro-level social work. She is focused on advocacy work that includes seeing state legislation pass and connecting that to local practice among those that work in the system. Kisa has experienced foster care and homelessness and has a passion to work for youth that have experienced the same. So Kisa, welcome this morning. Thank you for joining us. Can you tell us a little bit about yourself?
Yeah, thank you very much. I'm excited to be on this webinar because it's something that I am looking forward to doing on my own this year, with the thanks to some support that I've gained. But yeah, I am just freshly moved into Fresno, so I'm working towards those next steps of transferring, and I'm pretty excited about that. And yeah, I definitely am looking forward to school out here, and furthering my advocacy work. It was important for me to be on this webinar because I know that there's a lot of folks that are on this call right now that have access to the type of youth that could really use support. It's been my understanding that it's complicated for just your average adult to kind of understand the tax system, let alone young people, and then on top of that, young people that have came from the foster care system or have had to deal with homelessness. So yeah, I'm definitely excited to be on this call.
Great. Well, thank you so much. Can you start by telling us a little bit more about what financial health means to you and where tax filing fits into that idea of financial health?
Yeah, so for me, financial health, I think if you would have asked me like 3 or 4 years ago, I would have just kind of, explained not being homeless, just having, enough stability to live, which that's still true today. But I guess the base of what that is having the knowledge and tools to be financially independent is what I would basically chalk it up to be today. And so filing taxes is something that's been fairly new for me. I'm 24 years old, so it's still very new to me, and I think that it's important for me to do, especially considering I've been working since 18 to try and survive. So yeah, I think it's an important step to kind of being a successful adult. It's something I'm going to have to do if I want to own a home one day, or want to, do certain, have higher income. I'm going to have to learn the tax system. So I think it's definitely an important part of my growth and my my success in my future.
Mm-hmm. So can you tell us a little bit about when you started filing taxes and what questions and thoughts you had at that time?
Yeah, so I have only filed the last 2 seasons. So when I was 22 years old, that's the first time I filed. And I really didn't know where to start. And it actually wasn't something I was planning on doing at the time, to be honest. At 18, I started working, like I mentioned, but I wasn't filing my taxes because my biological mother had told me that I didn't need to. That because I wasn't making enough money that I technically didn't need to, which I'm not sure if it's still true or not. So I just didn't really worry about filing. But I think she was also claiming me, so we had some conflict there between her and I. But I wasn't even living with her, so I think she was claiming me, and I wasn't really living with her. Once I kind of had some support around 22 is when I finally first filed. And a lot of the questions I had when that first came about was, how can I do this on my own? Because the appointment went by pretty quick, and it just seemed if I had all the right paperwork and if I was already prepared, that it was something maybe I could do on my own, or I could, basically do that on my own.
Great, thank you. So there's a lot of questions, there's a lot of information coming at you. So I'm going to go to the next slide, which sort of talks about the first time that you actually did file on your own. And can you tell us about any assistance or help that you had and what could have helped promote success in the tax filing process for you that first time?
Yeah, so I definitely had assistance. I will say I feel pretty blessed and honored, I guess, that I have a really good support team that I had found. And I had my mentor who works with the County Office of Ed. She had kind of introduced me to that. Like I said, I wasn't planning on even doing my taxes that season. She just said she was going to her appointment. She asked me if I was going to go get or file my taxes too. And I told her, I don't know, I've never done anything like that before. And so she kind of helped me set my appointment at the same time as hers. She introduced me to a lady she had been seeing for years. She explained to me the paperwork I was going to need. And then, she sat with me by my side through the whole appointment and kind of helped explain everything that the lady was doing. And so that really, helped me understand that it was something I could do on my own eventually. It gave me hope, I guess, because I don't even know how I was planning for my future to figure that out. It wasn't even on my thought, in my thought process or anything. And she didn't realize it was something I didn't really know as much because I had been working. So I think without that support, I'm not really sure when I would have started.
Yeah, exactly. And have you ever used that free tax filing services that are available, and what were the results of filing your taxes that first time, since you did have help? But I think when we were talking, you mentioned that that help was through a paid service versus through some of the free services that are available.
Yeah, I wasn't sure about the free filing tax services, and I can guarantee you she might not have either because she would have explained that to me. She did help me though. It was through a paid service, but she did help me. And yeah, I think having this knowledge now, I'm just excited. So forward,
and
that's something I want to look into, of course.
Absolutely. So can you tell us about what were the results of filing your taxes these past 2 years? Did you get a refund? What sort of happened? And how would any additional income from a tax credit, how has that benefited you in these past couple of years of filing?
Yeah, I think these last 2 times when I had filed, I was really shocked at the amount I got back. I mean, I just thought it was something that we were supposed to do when we were adults. I didn't know that you actually get a large sum of money back, and maybe that's why my biological mother wanted to keep claiming me for so long. And yeah, it was just really exciting. It was like getting another Chafee grant payment almost. It was like getting a whole nother grant. So I was just really shocked at what I had received back. I wasn't expecting it at all. I mean, I heard it when the lady had told me my estimate at the end. I just wasn't really anticipating it to be so much.
And how did you end up using that?
Of course.
Yeah. Exactly. It's kind of surprising once you know about it. What did you end up using that income for? How did that help you? I know you were a student, you were experiencing some homelessness on and off, and how did that income help?
Yeah, I definitely use that towards books. The first thing, obviously with our grant money, that helps with school, but I kind of have a different story with my exit from foster care. So I don't qualify for AB 12 or any of the aftercare services due to the provisions within the law, aging out on your 18th birthday. So I definitely rely on the grants that we are allowed to get as foster youth in college. But that I definitely was excited. I was able to obviously pay for a lot more of my books, and it really helped me get through that semester in school. And I mean, I know I would have figured it out regardless. I go into survive mode. I would have figured it out. It just kind of relieved some of that extra stress, and I was able to just focus on getting through, the next couple of semesters. It actually helped me because I saved. So it was very helpful to have that stress kind of relieved off my back with that extra income it's not technically income, but I mean, it wasn't like obviously a monthly, pay, but that just having that extra money really helped me and my worries.
Mm-hmm. Absolutely. Well, thank you, Kista. Any final thoughts that you have for the audience today?
Yeah, I think I don't think I would have figured any of that out, like I mentioned, without my support. I think that's what's really cool, and what really motivated me to be on this phone call was to speak to other folks that have access to other youth that are like me, that are in my position. And, like I mentioned, maybe, even if you are like a rock star support for the youth, maybe you can find out more services that you didn't hear of or that are brand new on this webinar. So I just really encourage everyone to, soak up all the information through this webinar to really help the overall success of the youth that you serve, because it's really helped me feel like I'm moving towards my steps of my future and, my overall success. It's been very helpful. So, yeah.
Great. Well, thank you so much, Kista. And now we're going to move on into the next part of our presentation. We've had a couple of questions from Kista's comments about, can you talk about the age limits of the tax credit? Can you talk about, is this available to other college students? And now we're actually going to get into the background on the earned income tax credit, who is the eligibility for, and all of that with our speaker, Jason Montiel. Jason is a spokesperson for the California Franchise Tax Board, which administers two of California's major tax programs, the personal income tax and the corporation tax. He has worked for the past 4 years to educate the public about the Cashback California Earned Income Tax Credit, and this is his second year doing this webinar. Last year, he also did in-person tax presentations to transition age youth at the TAY conference in Sacramento, as well as the Hayward office of Side by Side, an organization that helps transition age youth. Thank you, Jason.
Well, good morning, everyone, and thank you for inviting me back. And I really, really appreciate John Burton Advocates for Youth hosting this webinar once again. And so thank you, Anna, for putting this all together. And before I jump into my presentation, I just want to say thank you to Kista for sharing her story. And for those of you on the line who can help transition age youth, who can serve as mentors like Kista had, boy, that would be really great. Anything you can do to help educate young adults about taxation would be really helpful. And one of the reasons that I really wanted to come back here today is I feel strongly about this, helping transition age youth, the chance to speak to them in Sacramento and also in Hayward. Really, I'm passionate about this because I really want to help get the word out about financial health. And I'm going to go ahead and really jump right in. And hopefully by the end of this, the taxes will seem a little less scary. And all the work that you're all doing, we really appreciate it. So I'm going to go ahead and jump right into the big question of the season here is state and federal tax returns are due this year on April 15th. That's tax day. This is our busy time of year, and basically that's the time when people are filing their tax year 2019 returns. They file them in early 2020. One of the questions we often get is who can file a return? And basically the takeaway is anyone with income can file. And we'll talk a little bit about filing requirements and income in a minute, but really anyone with income can file. And the reason why you want to consider filing is that you can actually go back to the previous slide. Thank you so much. By filing, you can go ahead and claim a refund. So if you worked, you may have a refund coming, and you might be eligible for some really valuable cashback tax credits, the California Earned Income Tax Credit, the new Young Child Tax Credit, and the Federal Earned Income Tax Credit. Next slide. Okay, thank you. Now, the refund, your refund or your cashback CalEITC or Young Child Tax Credit, we call it YCTC, and the Federal EITC, that's money that can be used for anything, for food, rent, you need to fix your car, whatever you need. The reason I mention that is sometimes I get a question of, well, it's a tax credit, do I have to pay it back? And no, the answer is once you get that money, you can use it for anything. The important thing to remember is that if you don't file, you can't get your refund, and you may miss out on CalEITC, Young Child Tax Credit, and Federal EITC. You're essentially leaving money on the table, and it sounds like Kista found that out as well. When you get that money, it can really make a big difference in your life. Next slide. So this slide talks about who must file a state income tax return. Kista touched on this a little bit about filing requirements. If you earn under a certain amount, that is true. You don't have to file your returns, but it's often in your interest to go ahead and file. Now, in California, this slide talks about those who are filing the single or head of household filing status. And when you file your returns, you pick a filing status based on your circumstances. And our past experience shows that transition age youth are more than likely going to use the single or head of household filing status. Someone who's helping you with your return can help you determine your filing status. But the key thing on this slide is that for those of you with no dependents, there's no filing requirement until you earn $18,241. If that person has one dependent, a dependent can be a child, the threshold is $30,841. So if you earn more than that, you need to file. But if you earn less than that, you don't have to file. But the important thing is, and I know that when Anna went over some of the slides earlier, many transition age youth are making less than this. And as you saw from the slide that she showed, by filing, they can get valuable tax credits. So even if you don't have a filing requirement, you want to go ahead and consider filing to claim your refund and valuable tax credits. Next slide. And this sort of sums it up. Again, even if you don't have a filing requirement, consider filing your returns to get your refund. So if you are working out in the community, if I was a barista at Starbucks and I worked during part of the year, I may have a refund coming. And then also you can claim the valuable CalEITC, YCTC, and Federal EITC. So a lot of money on the table, you just have to file. Next slide. So we've kind of given a little bit of an overview. I want to define a few things because I know that this is all about financial health and financial literacy. And so I want to talk about what a tax refund is. So if you have a job, you're that barista at Starbucks, you likely paid taxes during the course of the year, and they took a little bit out of your paycheck with each pay period, and that's called withholding. If you had too much withheld during the course of the year, that's how you get a refund. And you get that refund when you file your returns at the end of the year. If you had not enough withheld during the year, that's when you might owe. But many people end up getting a refund. So that's a good reason to file. And then when you file your state and federal taxes, you may be able to claim a refund. And this is important from both the state and the feds. So you want to go ahead and file your state and federal returns. Next slide. And so since we're defining things, let's talk a little bit about CalEITC, YCTC, and the Federal EITC. These tax credits, they work in a similar way in that they're cash back, and they're designed really to help low-income taxpayers. And they really reward people for working and can essentially put extra money in your pockets. Next slide. Now let's talk a little bit about the origin of some of these tax credits. Now the Federal EITC has been around for decades, and it's been around for a long time. In 2015, Governor Brown and the legislature created the California Earned Income Tax Credit as a way to fight poverty in California and to supplement the Federal EITC. So it was California's way of helping families most in need. And in 2019, Governor Gavin Newsom, and the legislature added the Young Child Tax Credit to help those with young children. So we have these 3 tax credits now. Next slide. So now that you've heard about the credits, you may wonder, well, how does someone qualify for them? So let's talk first about the CalEITC. The big news for tax year 2019, and these are the returns that are going to be filed actually starting right now. Tax season is here. It's a lot easier to qualify for CalEITC. Those earning $30,000 or less may qualify whether or not they have dependents. And that's really good news this year. The income threshold has gone up for this year. And so that's good news for young adults, including many of those transitioning out of foster care. They might find themselves now eligible for CalEITC. Just for comparison, at the bottom of this slide here, I show what the income threshold was for tax year 2018. Those were the returns filed last year. And so last year, folks could qualify if their income was less than about $25,000 if they had dependents, if they had children, or less than $17,000 without dependents. So as you can see from this slide, the income threshold went up. So that means more people are eligible, and that's good news. Next slide. So staying on the theme of how you qualify for CalEITC, well, basically, those who work, you can use that income to qualify for the credit. And I have something on here that says W-2 income. So if I were that barista at Starbucks, I would get a W-2 at the end of the year. And if you did work, you might want to remind those that you're working with that they should be receiving their W-2s in the mail here any day now. Employers are supposed to send them out by the end of January. And if they don't get them, they should go ahead and reach out to their employer for their W-2. Also, you can use another kind of income, self-employment income. So if folks that maybe work in the gig economy may have self-employment income, both of those types of income can be used to qualify for CalEITC. Some other requirements here, you must be at least 18 if you have no dependents, if you have no children. But there is no age requirement if you have dependents. So one example might be if I'm 17 and I have a child, there is no age requirement. So if I had income, I might be able to file and claim CalEITC. Other things that you need to have a social security number valid for work. You had to have lived in California for more than half the tax year. And there's one filing status that you cannot use. It's called the married RDP filing separate. Now this is pretty rare for transition age youth, but it is one that cannot be used for CalEITC. A lot of transition age youth will be filing likely single or head of household, but those are some of the requirements. Next slide. Okay, and so let's shift gears a little bit. We've talked about the CalEITC, and now let's talk about the Young Child Tax Credit. This is brand new, and we're super excited about this. It goes hand in hand with the CalEITC. So the way you qualify for this credit is a person who qualifies for CalEITC and has a child under the age of 6 will also likely qualify for up to $1,000 worth of Young Child Tax Credit. So Young Child Tax Credit is kind of like an add-on to the CalEITC. They really go hand in hand, and this one helps those who have a child under the age of 6. Next slide. So we've talked about CalEITC, Young Child Tax Credit. Let's talk about how you qualify for the federal EITC. Now for tax year 2019, you may qualify for the federal EITC if your income is less than $55,952. So the income threshold is even higher for the federal. So essentially it's easier to get. So if you know someone that has this income or less than this income, they may qualify for the federal EITC. Next slide. Okay, so let's, one of the questions, now that we've talked about these 3 wonderful tax credits, CalEITC, Young Child Tax Credit, and federal EITC, let's talk about the maximum amounts that people can get. So this slide here is designed to show you the maximum amount of CalEITC and federal EITC you can get. And the takeaway from this slide is it shows that when you have, as the number of qualifying children goes up, the amount of CalEITC or federal EITC you may be able to receive goes up as well. The maximum CalEITC you can receive is $2,982, and the maximum federal EITC you can receive is $6,557. It's important to realize, though, it is taxes. This is a little complicated, that the credits phase in and out at different rates, so you can't simply add the max numbers to determine how much you're going to get. Next slide. And just to give you a sense of how much you could get, I'll give you an example. For tax year 2019, a family with income of about $14,000 in the $14,000 range with 3 dependents. There's can receive a total of $8,053 between the 3 credits: CalEITC, Young Child Tax Credit, and Federal EITC. So that's the maximum someone can get. However, to qualify, it's fairly narrow. They have to be in the $14,000 range and have 3 dependents. Down at the bottom of this slide, I include some of the averages, and just to kind of be more realistic on what folks may get on average. For CalEITC, it's $190 is the average. And the Federal EITC, it's $2,333. So when we're out talking about the credits, we mentioned, depending on your circumstances, you can end up with hundreds or even thousands of extra dollars. And even if you add these averages, it's still a significant amount of money that can be added on to any refund you have coming. So it's really, really important to file. Next slide. Okay, so I like to show this slide here because people often ask, well, how much did California receive last year? And for those tax year 2018 returns filed last year, we issued a little over 2 million CalEITC credits, and for a total of $397 million. So it's quite a bit of money, and this is money that goes right back out into the communities. It's helping transition age youth. It's helping families all around California. And just to compare with the federal, of course, the federal the numbers are bigger. 2.8 million folks receive, or federal EITC credits were issued for a total of $6.6 billion. And this is money that goes to help families all around California. Next slide. So I'm going to bring out my crystal ball here a little bit and talk about what we're predicting for this tax season. So with the expansion of CalEITC, we're expecting about 3 million CalEITC claims this year, up from about 2 million last year. And the new Young Child Tax Credit, it's brand new. We expect about 400,000 families to qualify for that. We expect this year, between CalEITC and Young Child Tax Credit, $1 billion to be claimed. That's about $640 million for CalEITC and $360 million for Young Child Tax Credit. Now I'm tossing around a lot of numbers here. I just include these to let you know the money is real, and we expect it to help families quite a bit. And you can see $1 billion helping low-income families can really make a positive difference. Next slide. Okay, so I'm going to shift gears a little bit away from CalEITC, Young Child Tax Credit, and Federal EITC to give you a couple tips on what some transition age youth need to know. In addition to gathering up your tax documents and getting ready to do your returns this year, what you want to do is keep those documents so that even after you file, that you have them on hand in case FTB needs to reach out to you. We might have a question, and you want to have those documents on hand. And that's a good way to maximize your refund and maximize your tax credits you might receive. Next slide. And if we do need to reach out to you, I know when you open your mailbox, it's probably not people's favorite thing to get a letter from the FTB. But if you get a letter from the FTB, be sure to open it. Don't toss it in the garbage or set it aside. Open it up, because basically we might be reaching out to you to request more information so that we can process your return. You may receive, if we have a question, an FTB 4502 additional documentation required refund pending letter. And then the letter will look like this example on the slide here. This is the letterhead that we use. And it'll be an official letter from FTB, and it'll say FTB on it. Now, if you get a letter like this and you have a question, you're always welcome to call us at FTB 800-852-5711. You can speak to an agent. They can look up your account. In case you're wondering, is this letter for real? We always encourage people to be careful, and if you have a question about a letter you receive, you can call us and we will gladly look up your account. But this is an example of a letter that you could receive if we need more information. Next slide. Now, if the letter arrives, if you do get a letter from FTB, we're really just trying to verify that the taxpayer is qualified to receive the CalEITC or refund that they're seeking. If we have a question, we'll send you a letter within 30 days. and we do need a response before any CalEITC can be issued. So it's really important to respond. Again, don't set it aside. Go ahead and respond as soon as you can. Next slide. Now, also, if we need to reach out to you and the taxpayers has claimed any qualifying children, we may ask for Social Security numbers and any other info regarding these individuals. And that basically is FTB's way of validating the entire claim. So we can get that return processed and get you the refund and then tax credits that you have coming. We're taxpayers too. It's our goal to process returns as quickly as possible, but if we have a question, we may reach out, and believe me, we really want to get those returns processed as quickly as possible. Next slide. Okay, so we talked a little bit about if you get a letter from FTB, and kind of the takeaway from that is don't panic. Just go ahead and respond. One other thing I want to mention as a side note, because we've been working really hard with our partners over at Covered California, to let people know that, and this is important for young adults, for everyone, that it's important to have qualifying health coverage in 2020. There's a new law called the Healthcare Mandate, and it took effect back on January 1st of this year. And the mandate, it was created as a way for more people to get covered in California and to offer some financial help. And by the way, if you don't have coverage and you're seeking coverage, Covered California, the website is there, coveredca.com. That's a great place to learn about how to get coverage and seek financial help in the process. There is, however, a taxation element to it, and we'll talk about that on the next slide. Now, under this new state mandate, those failing to have a qualifying coverage could face a penalty when they file their 2020 returns in early 2021. And we want to get the word out to as many people as possible. You'll be okay if you have qualifying coverage, but if you don't, the penalty can be significant, starting at about $695 for an individual, and going on up for a family of 4, it can be over $2,000. And we want to get the word out so that people have coverage so they don't have to face this penalty. But it is part of the new law in FTB, the Franchise Tax Board. We are the administrators of the penalty portion. We're doing everything we can to let people know about the mandate so that they can get coverage and avoid a penalty. Next slide. Now, if folks don't have coverage, there is something called an exemption to the state mandate. And for instance, one example of an exemption is if people have a coverage gap, a health coverage gap of less than 3 months, they can avoid a penalty. And for more info on the penalty, the mandate, the penalty, and exemptions, they can go to our website, ftb.ca.gov/health-mandate. And you can learn a lot more about it. And again, we're all about education right now. We want people to make sure that they're aware that there's about the new law. It's real important to have coverage so they don't face a penalty. And thanks for letting me kind of add this on to this webinar. It's really important for young adults and for everyone to know about the mandate. So thank you. Next slide. Now let's talk a little bit. We're going to shift gears back to getting your returns filed. There's the good news is that there is free tax return preparation available to those earning about $60,000 or less. And there's a program, it's a really wonderful program called the Volunteer Income Tax Assistance Program, and it helps communities all around the state. I know Kista had mentioned she's down in Fresno. There's a wonderful group down there called United Way, Fresno and Madera, and they offer volunteer income tax assistance sites in the Fresno area where you can go in and get your returns done for free. VITA is also available in Sacramento, all around the state. And I'm actually going to an event here in Sacramento on Saturday where it's our local kickoff for VITA for the season. And it's really wonderful. People make an appointment, they come in with their tax documents, they sit down with an IRS certified volunteer who fills out their returns right on the spot. Oftentimes they're in and out within an hour, and it's a wonderful program. I've gone through the training myself. It is rigorous training. I would trust a VITA volunteer to do my own returns, and it's just a wonderful program, and especially for transition age youth.
Okay, I need to call back in. For some reason, my phone would not let me merge again in the same call. So let me.
1 second. I'm going to figure out the background noise.
Anna, you're not on mute.
Okay.
Jason, I will continue.
Okay, no problem, no problem. Again, this is Jason Montiel from Franchise Tax Board, and I was just talking about the volunteer income tax assistance. It's available, this program is available all around the state. It's really wonderful. I encourage those of you who help transition age youth to educate them about it. There's a wonderful website, CalEITCforme.org. And if you go there, there's a place where you can find a VITA site in your community. It's really wonderful. And next, let's go ahead to the next slide. Thank you. I'm going to go ahead and wrap up here. And just in conclusion, things that transition age youth should know, the takeaway is that the federal government, the IRS, they started accepting tax returns on this week, on January 27th. And the Franchise Tax Board, we've already been accepting state returns, so now is a good time to go ahead and gather your tax documents. I had mentioned gather up your W-2s, any financial statements you have, and go ahead and start to work on your returns. Take advantage of VITA. It's a wonderful service. It's free. And just keep in mind that you want to go ahead and file those returns by tax day, which is April 15th. And with that, that's the end of my presentation, and I really appreciate your time. Thank you.
Great. Thank you so much, Jason. And everyone, just a reminder to type your questions into the control panel, and we can cover those with Jason during our question and answer session. I'm now going to go over some specific situations. One second, I'm going to try and deal with some background noise here. All right, I think that's better. I'm going to go over some specific situations that have to do with transition age youth and different statuses. So the first area that we get a lot of questions about is around immigration. So if you're an immigrant, the answer really is that if you qualify for and claim the CalEITC, you must have lived in the U.S. for more than half of last year. You have to be a citizen, a resident with a green card, or be married to a U.S. citizen or resident and filing with that person. For those with deferred action for childhood arrivals, you have to have a social security number that allows you to work and use that social security number to claim the California Earned Income Tax Credit. And so there are folks coming up in the presentation to talk about the legislative advocacy happening to change that in future years, but that is our current information for this filing year. So the next situation I want to talk about are for our students, so our students filing their taxes. So very broadly, students receive many different tax forms, and it's sometimes hard to determine what is taxable and what isn't. And our guide that we've provided in the handout section helps by walking through exactly how to do this, and we've put them in the presentation here. So first, the financial aid award letter comes, and you can see an example here taken from an actual UC Berkeley letter. And it's you kind of have to pay attention to understand what is in this letter. So you see that there's the $32,000 total cost that's broken up above, and then you can see the gift aid. That's the total amount of financial aid. So $7,907 is the difference between the total cost and total aid. So the question is, what part of the financial aid is taxable? So the aid that is used for books, supplies, and tuition and fees is not taxable. But the aid for living expenses such as room and board is. So in this case, to determine the taxable amount is not the total living expenses. Instead, what you do is you take the total gift aid, you subtract first what was used for non-taxable purposes, and the remaining is what is taxable. So in this case, you take the $24,000 minus $1,200 minus $1,200 to get the $10,000 that we have here. So that's just one example, and that's why we have it in the guide in here, so that when you're assisting students with their taxes to really put in that correct amount. Another form is the 1098-T, and students receive this, and this is what you paid for education, what you owe, and scholarships. And there are 3 spots to bring your attention to. First is Section 5 is the total amount of financial aid, not including loans. And if you take the example from my last slide, my gift total would go into Section 5. Then Section 1 is the amount you paid that does not include the Section 5 amount, and Amount 2 is the total charge. So again, from the award letter, that was under the total cost. So this is the second form to kind of pay attention to for students. And then another form for students is the 1098E, which, it starts with 1098, 1098E, and T. So if you have a student loan, you are going to get the 1098E from your lender, and this may also have been sent electronically. On this form in box 1 is the total interest payments for that year that a student has made. So if they're making less than $80,000 and are paying off their loans, they can deduct up to $2,500 of student loan interest from their taxable income on the federal taxes. So in this example, they could deduct about $2,500 because they've paid $8,582, and we're assuming that they're not making above $80,000. Like we mentioned in the beginning, the average earnings is a very modest income that would qualify them for most of these refunds. So the next thing to consider for students is the student loan interest deductions, and this just shows where that would show up on the federal 1040 tax form, the individual income federal tax return form. This is just an image to show where that will appear on line 33. Also for students and college representatives, so I know there's a lot of folks on the phone from colleges here that support students. And what we want you to consider is that taxes are part of the FAFSA financial aid process. Students complete their taxes in February, then complete the FAFSA by May. So once you filed your taxes and completing the FAFSA, you use the IRS data retrieval tool on FAFSA.gov, and it's much easier to fill out your financial aid applications if you've already filed your taxes. The income is automatically uploaded instead of having to enter it by hand, and this can reduce any errors or differences that you're seeing there. So just a reminder, the California Earned Income Tax Credit, oh, just one second, I think I'm getting some background noise again. Okay, thanks. Sorry about that. I think I had to mute a different computer mic. Thanks for waiting, everybody. So we were just going over the FAFSA portion of the challenge, which we do have a FAFSA challenge on our website, and the link is here. And just a reminder that the California Earned Income Tax Credit does not impact your eligibility for the FAFSA. And again, check out our website if you're helping students to do both of these tax filing process and apply for financial aid. It's a lot easier to do that together. And what I'll talk about next is if a student has not filed their taxes, you may have to demonstrate a proof of non-filer by contacting the IRS and receiving that proof when you're filling out your financial aid forms. So just demonstrating this proof of non-filer status can actually be tricky. So as of this last year, there was a new rule with the IRS so that if you obtain proof of non-filing status, and if you're not able to do so, you can sign a statement saying that you tried to obtain that proof. However, the IRS does have discretion to determine if that attempt was sufficient, and this whole process of kind of getting the proof, validating that effort, may delay the financial aid process. So filing your taxes actually makes FAFSA applications easier. So another, moving away from the students, is just talking about the situation of youth experiencing homelessness and who could definitely benefit from these tax credits and refunds, but there's some different barriers there to consider. So for youth who are homeless, you may need additional support to access their full refund. One of the first things asked when filing your taxes is, what is your address? A second is, what is your bank account? So you can do your taxes by using the address of a local clinic, shelter, or drop-in center with their permission if you don't have an address of your own, or if the young person you're supporting does not. And if they do not have a bank account, they can have a check made and take that check and a government ID to a Walmart and have it cashed there. And if you don't have a government ID, what you can do instead is have a tax refund put onto a prepaid debit card that you have to order the card before you filing your taxes. And NetSpend has a good card. This comes with an account number, and the refund is paid onto the card and sort of prepaid on there. And then the young person can use that card. So if someone is homeless, this is the way to kind of overcome those tax filing barriers in receiving the refund. Otherwise, assisting that person to get a bank account and a routing number and add that to their tax forms would be a good way to go, and potentially using a free banking service such as a credit union. Another situation is if a young person is in juvenile hall, which can actually be up to the age of 25. So claiming the California Earned Income Tax Credit, it can be done regardless of past convictions. The only thing to consider is that wages earned while incarcerated don't count for the California Earned Income Tax Credit, so it would have to be other earned income. There is new state legislation that does require youth in juvenile hall to access the internet for educational purposes, which can really help them get their taxes filed or the information that they need. But if they still can't get their tax forms electronically, they will need someone to bring them in during visitation or to file for a tax extension for that year. You can allow for a tax extension until October 15th. Another important consideration is for transition age youth who are in foster care, specifically ages 18 to 21. That's 2/3 of our youth in extended foster care living in a SILP or a transitional housing placement for non-minor dependents. So a lot of young people wonder what they should use as their filing status. So this could be single head of household, unmarried, paid more than half of the cost of keeping up home for a year, and have a qualifying dependent living with them for more than half a year. And if they're not a single head of household, probably just they're going to file as single. And I'm going to go over custody and head of household in the next couple of slides. But for foster youth living in supervised independent living placements or in transitional housing programs, it's important to know those stipends, the allowance, and the infant supplement are not considered taxable income. So those are not included as taxable when they're filing. So it's just really important to note, especially for those of you helping transition age youth in extended foster care with their taxes. The next slide is about parenting and about joint custody. So there are benefits for dependents, as we mentioned, with the Young Child Tax Credit. But if you have both parents, the benefits of the dependent are only for the custodial parent. So if the child is living with that parent, and the parent with the child for more days of the year. So whoever the child is living with for more days of the year is who would file for that tax credit. Now, if this is an even split, then it would be the parent with the highest gross income who claims the child as their dependent. A little bit more to be claimed as a dependent. Now, this was something that Keista mentioned as well. So you cannot actually file your taxes yourself if you've been claimed by somebody else as a dependent. So trying to file taxes to claim the California Earned Income Tax Credit, if you do so electronically and someone else claimed you as their dependent, you won't be able to electronically file. Legally, you can be a dependent in a couple of different ways. So how do you know if you're someone's dependent? Well, first, if you're their child, a student, and you're receiving more than half of your financial support from that taxpayer, they can claim you as a dependent. And second, if they're a relative and you live with that taxpayer and you're making less than $4,050 a year and you receive more than half of your financial support from that taxpayer. So again, the key here is, are you receiving half of that financial support and are they claiming you? Those are the questions that you would need to know. But if you think you're being claimed by someone fraudulently and do not fit into one of those categories, to file your taxes, what you'll have to do is file them by mail. And you can also call the IRS identity theft number, and the IRS will investigate if someone is wrongfully claiming you as their dependent. So just a little bit more here on specific scenarios. I want to be able to talk through these different backgrounds with specific examples of individuals and apply some of this knowledge that Jason and I have covered. So first, let's talk about Brenda. Brenda is a 23-year-old student earning $4,000 per year from their part-time job. They've received $12,000 for tuition and $12,000 for living expenses, and they have no children. So the questions are, is Brenda legally required to file their taxes? And is she eligible for the California income tax credit? And how much could she receive from that tax credit? And so the answer is no, their earnings are not, at that threshold that Jason mentioned earlier of $18,241. Their taxable income would be the $4,000 from their part-time job, plus just the living expenses portion from being a student. So that totals about $16,000, which is below that threshold, which does make Brenda eligible for the California Earned Income Tax Credit because her income, again, is below that qualifying income of $30,000. And she could get $240 because she is single with no dependents. Another example here is Joe, who is 19, a foster youth and a part-time student who earns $12,000 per year from their part-time job and receives $960 monthly in their SILP payment and has no children. So again, does Joe need to file their taxes? Would they qualify for CalEITC, and how much could Joe get from it? Again, Joe does not come up to that mandated filing threshold because he does have $12,000 from the part-time job. The SILP payment is not taxable income. And what you have here is that it doesn't meet that mandated filing threshold to file, but we still do want Joe to file because he is eligible for the California Earned Income Tax Credit because he's earned some money, but not more than $30,000. And he could also get $240 just from the California Earned Income Tax Credit. So let's talk about a youth who is a parent. So here's Charlotte, 24 years old, is not married, earns $22,000 per year, has one child who lives with her the entire year. So again, is she required to file taxes? No, her taxable income is below the threshold for one dependent of $30,000. Is she eligible for the California Earned Income Tax Credit? Yes, because she's earning less than $30,000. And how much could she get from the Earned Income Tax Credit? Up to $1,605. And she does qualify for the Young Child Tax Credit with her dependent, who is 3 years old. So I just want to move to some of the questions that we've received in the panel now that we've gone over some scenarios and some of the technical questions that we've received so far about filing your taxes. So Jason, if you can also unmute yourself, and we'll field a few of the questions that have been submitted through the panel, and then we'll go on to some of the logistics about how to really support youth, sign up for our pledge, and circulate information. So the first question, let's see, we'll start here. Well, it's just more of a point that Max wanted to make in the question panel, saying, if you've been working since age 18, you could go back and file for 3 years for federal and 4 years for the state to claim a refund. Jason, do you want to make any additional points about being able to file for previous tax years?
Yes, and I'm glad, thank you, Max, for bringing that up. That's actually a really good point. You can go back. So if you're just learning about the California Earned Income Tax Credit, federal EITC, Young Child Tax Credit, or just filing in general, you can go back and file for the previous years. And you can do that through a paid preparer or on your own with software, or many of the volunteer income tax assistance sites will go back and allow you to do previous year's returns. It's kind of a site-by-site basis. So when you're reaching out to a volunteer income tax assistance site, ask them. Some do, some don't, but that's something really good to keep in mind. So that way, when you go back and do not only your returns for tax year 2019, but for previous years, that can be quite a bit of money. And I've seen people come into a VITA site and get multiple years done and end up with a pretty hefty refund overall. So that's a really great point. You can go back and file for previous years.
And there's just a point too that the income thresholds and limits were a little bit different, but you can still file those previous years. And
that is an excellent point too. When the California Earned Income Tax Credit started for the 2015 tax year, the income threshold was quite a bit lower. It was around $14,000. Now it's gone all the way up to $30,000. So those requirements for CalEITC depend by year, but yes, you could go back and claim it for previous years, and that's also a great point, so thank you.
Okay, so there's another discussion point here that if you're claimed as a dependent on someone else's return not supporting yourself with low income, you can't qualify for federal or state CalEITC. Is that correct?
So that's one where you do need to check. So for instance, it sounds like a case where someone might be able to be claimed by someone else. That's something you do need to work out with that person.
Exactly. So another question that we have is if a student is undocumented, not protected through DACA, but has lived in California in 2019 for this full year, will a student be eligible for the CalEITC?
The way for the CalEITC, the student would need to have a social security number valid for work. That's the important part.
And if a student has no job but has taxable financial aid, can they file and qualify for the Earned Income Tax Credit?
So for CalEITC, it does need to be earned income. So it would be, and some examples of earned income would be wages and salaries, any long-term disability benefits, or net earnings from self-employment. So it has to be earned income.
Let's see. Do young people with an ITIN qualify for the CalEITC and other tax credits? We're going to get into that a little bit later. Jason, do you have a quick response?
The short answer is no. But I'll defer to you when you talk a little bit about it later, because I know you're going to talk about changes you're working on.
And another question is, could you please tell me the age limits for this tax credit?
Sure. So for the California Earned Income Tax Credit, someone with no dependents, meaning no children, they have to be at least 18 years old. However, if they have a dependent, if they have a child, there is no age requirement. So that means, the example I used a little earlier was if you're 17 and you have a child and you have that earned income, you may qualify for CalEITC. So basically, if you have a child, there's no age requirement.
Another question is, can students file taxes if they were working under federal work study?
You know, that's a good one. I'm looking at some of the requirements here, and I'm going to have to answer that one offline.
As someone who was a student who got federal work study, half of that, you do get a W-2 from your employer, and I'll let Jason more fully answer that, but I remember that I did get a tax form and did use that to file my own taxes when I was a work study student, because you are earning. It's just that that employer does get a benefit from sort of training you through employing you, and they get paid back some of that income that they pay to you. So that was my experience, and I'll let Jason answer that, but I believe that it does count as earned income income for that year.
If you're getting the W-2, that would suggest it's earned income, and that's the key part. Is it has to be wages, salaries, tips, or other taxable employee pay, or any net earnings from self-employment.
So another question is, can someone qualify for the earned income tax credit if they are claimed by someone else on their taxes? Jason, do you want to answer that?
My understanding is no, but I need to double check on that.
Mm-hmm. And that my understanding is also no, that you do not qualify if someone else is claiming you. They would qualify for their own, and then you would not qualify because someone else is getting the benefit because they are the person who was doing that financial support. So that's kind of the explanation for that policy, but that's our understanding.
Yeah, mine too.
One is that from Sarah in Bakersfield, that she's saying any youth in Bakersfield that are current or former foster youth can come to the Dream Center and receive multiple services at our building, and we refer all youth to VITA to have their taxes done. So thank you, Sarah, for getting the word out about the Dream Center and the VITA tax services.
Yes, thank you, Sarah, for doing that. And I know there's a really strong VITA program in Kern County, so thank you.
One last question before we move on with the presentation is that, is this credit available to all college students who are struggling, whether living with parents or on their own? So again, I would answer this one, Jean, who asked this question. It really depends if they're living with parents and the parents are providing that financial support and claiming them on their own taxes, then the answer would be no. If they're on their own and no one else is claiming them as a dependent, then the answer is yes. So it's going to be a case-by-case basis. It is open to anyone, including all college students who are struggling, and it really comes down to those individual circumstances. And I'm happy to support Jean with any further questions there. But thank you so much, Jason, for that Q&A session, and we will answer more questions at the very end of the presentation, but we'll move on now with ways to help transition age youth claim the California Earned Income Tax Credit. So now that you know about all the technical information, how can we help make this happen for youth who really need this support? Well, what I'd like to do now is talk about what we here at John Burton Advocates for Youth have done to try and support those who, like Keitha said, have access to young people, are doing that direct service, are mentors, do have groups of students or foster youth or youth on probation or in juvenile hall that they want to help, youth who are homeless that they want to help. The first thing we're going to ask you to do is to join us in our movement by filling out this form to take the pledge, which means you're committing to supporting transition age youth with filing taxes this year. And what you'll get when you fill out this form is you'll receive the free, reliable information, support, and materials from us here at John Burton Advocates for Youth and from our partners throughout the tax season that will help you to get that information out and overcome those barriers that we talked about earlier. So please take the pledge, and we'll help you by getting you the materials that you need. Next slide is our publication is up to date, and it's a short publication that has everything you need to know very clearly laid out. So one, you'll learn about the Earned Income Tax Credit. You'll have the questions about, do I need to file taxes? All of those very specific charts that Jason referred to are in this guide. It has a checklist for the documentation that is needed. I know we went through those student forms. We went through some other specific examples, a checklist of those types of income forms. But all of that is listed in here. It's a nice checklist you could use with transition age youth to make sure they're ready to file their taxes. You can help them filing their taxes with free online services or in-person tax support from those VITA centers. Our links are in the guide. And help getting that tax refund. There's also an appendix with just all of the helpful resources that Morgan's going to talk about in a little bit. On our website, we do have informational materials that are free for you to download and share. There's some contact information here for Jason and others who specialize in this work so that you can reach out to them directly. And so this information is here and on our website. All of these links are live in the presentation if you download it. Now, here is an important part to point out about documentation. If a student has moved or a youth has changed placement and extended foster care, that W-2 might have gone to an old address. They might need help getting their tax forms, their pay stubs. They might need assistance, especially students who might have disabilities might need extra assistance. And then again, some of the proof of health insurance, the bank account. These are a lot of things that can pose barriers to finishing and filing your taxes. Now, that's why we are really encouraging folks to use this checklist so that people can prepare in advance and take the time they need and start sooner in the tax filing year so that they can file their taxes and get that refund as soon as possible. Another thing you can do to help youth is to just secure those personal documents. If you need help, here are some ways to get that help. The OMBUD's office number is listed here. If you're not eligible for a Social Security number, you can apply for an ITINs number from the IRS and use that to file, although they would not be able to qualify for the California Earned Income Tax Credit. They can still file, and there may be refunds and other things that they do benefit for, just not this one specific credit. The other thing you can do is dedicate time between January and April for tax filing. You can help them schedule their free tax appointment, help go through the guide, and find a local tax prep event that Morgan's going to talk about. The dedicated time is January 30th, today, and April 15th. But again, you can file throughout the year and they can back file. The other thing is just this information here about our direct free services. We don't want those refunds to go to a for-profit paid tax service company when they do not need to. That should go into the pockets of youth. So please, please, please help direct young people to free services whenever possible. For you in the county world, we do have some guidance that has come down from the Department of Social Services each year about these tax credits, and these are the 2018 and 2019 publications that you can forward to your colleagues should that be of benefit to you. And you can integrate this information on the Earned Income Tax Credit into your existing programs that you already do, whether that's on campus, through your foster care independent living program, through team decision meetings. Like Keista said, financial health is a critical part of that transition to independent living and to being a successful and healthy adult. So please just integrate any of this information. Like I said, it's free for you to use and download and circulate, and build that into the work that you're doing with young people already. Here's just more information about filing for previous years that we've talked about before. And now I'm going to hand it over for some helpful resources from Morgan. So, one second. Morgan is actually the communications manager for Golden State Opportunity, and he graduated from Boston University with a Bachelor of Science in Journalism and went on to spend half a decade as an investigative reporter in New England, mostly with the public interest nonprofit BT Digger. More recently, True worked as a strategic communications consultant for nonprofits, including the American Civil Liberties Union of Vermont. And he is working on communications and helpful resources around the California Earned Income Tax Credit, and is going to tell you about those now.
So yeah, hello everyone, good morning, and thank you for participating in this. We're really excited to share some of the new resources that we have. So yeah, I work for Golden State Opportunity. We are a nonprofit that was founded by Joe Sandberg. He was one of the advocates who worked with Jerry Brown in the legislature to create the Earned Income Tax Credit back in 2015. And then he saw that in that first year, uptake was not what he had hoped and what a lot of the government and advocates around this had hoped. And so he created Golden State Opportunity in our CalEITC for Me campaign to partner with the state to increase uptake and really try and make sure that everyone who's eligible for this credit is claiming it. And so one of the ways that we do that is through our website, CalEITCforme.org. on that website, which we've just updated for this year, we've created a much more mobile-friendly website. We're excited about that because the research suggests that low-income folks are typically accessing the internet on a smartphone and not a desktop or a laptop computer. In previous years, our website had been wasn't mobile first, and it now is. So it displays much better on mobile. It's much easier to use. And one of the great resources there is this CalEITC for Me calculator tool. What you can do is you can go there. We are working on getting it up in all of the different languages, but you can select your language. We're going to have about 10 different languages this year: English, Spanish, Mandarin, Vietnamese, Tagalog, Hmong, Farsi. I may be leaving a couple out, but the calculator tool should be available in many different languages. You can put in your income, your filing status, the number of children you have, answer a few other questions to make sure that you're eligible, and it will spit out your estimated refund. It will tell you your federal refund, your California EITC, and then it also has the young child tax credit this year as well. And so that can be really motivating for folks to see, even before they've gone in to get their taxes done, that they have, you know, whatever it is, several hundred or several $1,000s waiting for them. That can really help motivate them. And then that actually flows into the next tool on our site. If we could, yep. So it's the free tax prep finder. And, you know, again, there's after you calculate what your refund might be and find out if you're eligible, it prompts you to go to this next page, which we work with FTB to populate with all of the various VITA sites throughout the state. And so you can put in your address, your zip code, and actually new this year, it uses your IP address to locate your phone if you're, to locate where you're accessing it from. And it'll immediately, if you're in Los Angeles, show you the sites throughout Los Angeles. You put in your information, it will show you with an even greater level of detail what VITA sites are close to you. And as everyone's mentioned, VITA is a wonderful service, and it's really important if you're working with young people who are filing taxes for their first time to try and direct them to these free services, because we've actually learned in our conversations with Intuit, which makes, which offers TurboTax, they help us make that calculator tool. And one of the things that we've learned from them is that that first time you file taxes is very formative in how you file taxes after that. It's honestly, they say, pretty rare from their market research for people to change how they file taxes. Typically, the way you do it the first time is the way you do it going forward. And I know that resonated with me because it's been true for me. I've done it the same way every year. And so if we can get young people to use VITA services and they have a good experience with it, which they're almost certain to do, VITA has a lower error rate than for-profit tax preparers. So if we can get them in the door, hopefully that shapes some behavior going forward. And this tool can help them find the location nearest them, and they can also sign up for a reminder so that they will get an email saying, hey, make sure you've completed this process. And so that's the free tax prep finder tool. And then we also have resources for folks that are working with young people. We have these printable flyers in English and Spanish, and some of them are really focused on connecting your eligibility for the CalEITC to other benefits like CalFresh, Medi-Cal, and things like that. Because if you are eligible for the CalEITC, odds are good that there are other public benefits that you can use. The other thing you'll see on our resources page are some toolkits that include sample posts and social media graphics that can just help you raise awareness within your network of the CalEITC, the Young Child Tax Credit, and everything that's out there, for young people, young workers to claim on their taxes. So if you're interested in helping us get the word out, please do. One thing, the next slide shows that we have this text line. If you text EITC to 555-888, we will send you a link to the website so you can calculate your refund, find the closest VITA site, and then once folks have texted, we can actually text them reminders to make sure they've filed their taxes. And if If you want to follow us on social media, we're at CalEITC for Me for the CalEITC for Me campaign, and then we're also at Golden State Opportunity, you know, for our other anti-poverty campaigns. So follow us, engage with us. We'd love to connect with you. If you are curious about printing out those flyers, or you need anything, feel free to email me. I'm Morgan at Golden State Opportunity. We'd love to get you involved, and we can connect you with members of our team to help you with whatever it is you need.
Thank you so much, Morgan. That text EITC is such a great tool, especially for those of you working with youth who can then receive that information direct on their phones as well. Thank you so much for sharing all of this.
Yeah,
and I will be circulating. Yeah, anyone who takes our pledge, I'm going to be connecting them with these Golden State Opportunity resources, materials, and everything. We're sort of trying to spur all of this really helpful material. All of these resources are linked in the EITC publication on our website in the appendix, page 13. You can get those links all in one-stop shop. Our last presenter today, and certainly not least, is Jackie Wong, who is going to tell us about our state efforts to expand and increase access to the California Earned Income Tax Credit in future years. So Jackie Wong believes we can end deep poverty within our lifetime. And prior to joining GRACE in 2018, she served as the Government Relations Director at the National Center for Youth Law. She was the Principal Policy Consultant to the California Senate President and the Statewide Director for the Foster Youth Service at California Department of Education. And she has close to 3 decades of experience inside and outside of government advocating for educational and economic equity and racial justice for children, youth, and families. So Jackie, tell us about your efforts that are happening this year and how folks on the call can support.
Well, thank you for having me, Anna, and I am so excited about this presentation because I think a lot of us on this call actually work really hard to get it done, so super excited that we're rolling this out and feel a little bit old with 3 decades of experience here. And I'm also going to apologize to Jason that I'm an October filer, so apologize for that. I'm one of those. But the End Child Poverty in California campaign was established because California has the highest number and rate of children living in poverty. Next, Anna, and for us, it was unconscionable that in the richest state in the nation, with the largest number of billionaires and millionaires, we actually have almost 2 million children. That's 1 in 5 children in California living in poverty, and almost half a billion, 450,000 children living in deep poverty. So that is actually larger than the population size of Oakland, for context, right? So we developed a plan that was issued in November of 2018, an expansion of the CalEITC and various other cash policies was kind of the foundation and the centerpiece of what we were trying to do. As many of you know, deep poverty and poverty in general, it negatively impacts the lifespan of young adults and children in the system. And we often use kind of interchangeably the concept of deep poverty and extreme poverty. And for the context of this conversation, we use the California Poverty Measure. And for a family of 3, a single mom with 2 children, that's $13,400 annually. And so what we're trying to fight for is actually to ensure that all families are living above that 50% mark. I should note that a lot of our federal programs and other programs are means tested against the official poverty measure or the federal poverty line, which is a family of 4 earning $12,900 a year. Next. Thank you. We have had a lot of great political will from congressional and state leaders on trying to address this issue. Here we have Congresswoman Lee, who was at one of our kickoffs, stating that it absolutely is a moral outrage that we allow our children and live in destitute poverty in California. Next. And so for context, why this is important to us is kind of the affordability crisis that we all have been hearing about in California. I have to give credit to the California Budget and Policy Center, who's actually kind of really made this, the conversation around affordability really simple to understand. So for a two-parent family, basically the statewide annual total is $59,338, right? Statewide annual to make, this is actually the cost of making ends meet on average in the state of California. So when you think about who is eligible for the CalEITC, we're really talking about those families living right at the poverty line or just above it. And so really we see the CalEITC and the Young Child Tax Credit as a fundamental part of that safety net, right? And so the statewide average for a single parent is actually, to make those ends meet, is approximately $66,000. Again, that's why I think we're encouraged by this huge push by everybody to make sure that everybody is filing their taxes and benefiting from that CalEITC expansion. Next. So another slide that actually kind of illustrates the benefits of CalEITC, and this is data from last year, is that we understand that there are regional differences. So people might say, well, maybe folks don't need it in certain areas, but this highlights how people are trying to make ends meet. This is basically a single parent income, again, with two children, one school age and one not school age, and that kind of orange line is what a basic family needs to make to actually thrive in those communities. So you can see in a county, in a low-cost county like Fresno County, a basic family budget should be around $51,000, or in San Francisco, it's $103,000. So again, highlighting the affordability crisis and how programs like the CalEITC can actually close that gap and help people live in those communities. Next. So we have a plan. It's within our grasp. So I apologize that I'm speaking fast because we're a little over time. I apologize, Anna. Next. What I'm going to talk about next are the 2020 emerging policy issues that several of us have been working on. First and foremost is the expansion of CalEITC and the Young Child Tax Credit to ITIN filers, so those without Social Security numbers. And I'll talk a little bit more about that at the end. There are a few slides to kind of highlight what the issue is and why a coalition of us have gathered to continue to advocate for inclusion of ITIN filers. We are also talking about a modified young child tax credit that we are calling the Child Poverty Tax Credit, that is targeted specifically to, again, those families living at deep poverty. And again, as a reminder, those are families of three living below $13,400 a year. So different from the general expansion, this is really to ensure that, again, those families are living in and out of homelessness, have food and housing instability, that they're actually provided the basic means and cash policy to ensure that their young people can go to school focused and thrive. So, and it also takes into account the variance of cost of living in different regions, similar to other programs, so high cost and low cost programs, similar to our CalWorks program. Another conversation that is happening that folks are exploring and legislators are exploring is a targeted auto filing process, where, as we can see, that the tax filing system is a little bit complicated. And if you would never have had to file because you don't make the threshold, it's really, in terms of a habit of practice, you don't realize that you need to. And so we're putting a lot of effort, and I'm really excited about outreach, but exploring ideas and ways to actually increase the uptake of CalEITC by seeing whether or not FTB can do an auto filing for certain individuals, like transition age youth or other targeted programs that may be simple to kind of just evaluate kind of the eligibility, if you will, of what that credit might look like, and then to cut them a check, if you will. Folks believe that this could increase the CalEITC utilization. So another emerging policy issue, which was in the Governor Jan 10's budget, and Jason, I don't know if you want to speak to this, is a proposal that is under current consideration proposed by the administration, is basically whether or not you can actually do that advance payment already with a few targeted folks. So advance payment, we understand that some families actually may want to have that money monthly so that they can pay for the rent in real time versus one lump sum in arrears, if you will. So how do you actually advance that payment so that people can have cash in their hand to spend? So the conversations right now is whether or not it should be monthly, quarterly, or lump sum. The reasons these policy issues are under consideration or these discussions are happening is because there are certain interactions with means-tested public programs, because that could disqualify them from certain programs like CalFresh or CalWorks. So I understand that there's an open kind of comment period right now on that, and FTB is receiving those comments due by tomorrow, and I will be submitting some comments to that effect. Next. So back to the beginning, there's a 2020 budget campaign to include all ITIN filers in the CalEITC and Young Tax Credit. For the purposes of this conversation, that we know that the families, the population that the End Child Poverty Campaign and the Grace Institute is focused on are those families, again, living in deep poverty, right? Living in and out of homelessness, in their cars, unstable. Is that at least a third of families are actually excluded from the benefit of that CalEITC. So we really are, several of us have been including, wanting to have the legislature and the governor include them in the filing status because we think it's actually just unfair and discriminatory in certain ways. In regards to the Young Child Tax Credit, it's actually much more restrictive than even the federal child tax credit. So the federal child tax credit allows ITIN filers to benefit from that, but actually California's Young Child Tax Credit does not, excludes them from that opportunity. So we're working with a number of groups listed here to change that. Next. This is just, we had a big Twitter kind of storm a few weeks ago, and this is an example of, again, another slide from the California Budget and Policy Center highlighting the contributions of ITIN filers and undocumented immigrants. They actually do file, and they have a significant, contribution to California's economic prosperity. And we feel that it's just right and just to include them, to make sure that they actually have, can fulfill that California dream for all and not for some. So next. So we would like you all to join the CalEITC Coalition by emailing Sasha Feldstein at sfeldstein@thecalimmigrant.org, or send a letter to your representative and sign up for updates at the Cal Immigrant webpage. Share personal stories, and these are a few examples of how you can be engaged in this movement. And so I wasn't sure if this was said earlier, but for the Young Child Tax Credit, which is a modification of what we were proposing last year, is the targeted child tax credit, is all you need to do is earn $1 to benefit from that $1,000 Young Child Tax Credit, right? So even though, we went through kind of a series of 20,000, 12,000, or if you are a parent or a filer that has a dependent 0 to 6, you only have to earn that $1 to be eligible for that. So that's essentially free money that might be left on the table if we don't do enough strategic outreach. So next. And this is my contact information if you have any questions or want to give me a call about what I just presented. And that's our website, endchildpovertyca.org.
Great. Thank you so much, Jackie, for sharing that upcoming advocacy in ways that folks on the call who obviously care about these benefits and alleviating poverty and supporting young people and people who are struggling. So really appreciate you sharing that information with us today and for all the work that you're doing to uplift all of California. So that is our final presentation aspect for today. I was looking at the question and answer, so please type in any final Q&A that we can talk about with you. then we will close out our webinar. And just one more time, thank you so much to Jackie, Jason, Kisa, and Morgan for everything that you're doing to advance healthy outcomes and financial health for our young people in California. Those 3.8 million transition age youth are really benefiting from the work and efforts that you're doing. So thank you so much.
Thank you.
Well, I don't have any additional questions. Yeah, of course. I'm not seeing any additional questions. And I'll just wait for another minute for folks to send those in. I know we're a little bit over time here, but thanks, everyone really has stayed on the line here, and this is such valuable information. And Sarah says, can I get the numbers again for the text to Morgan for your text line?
Yes, so you text EITC to 555-888. So 3 5s and 3 8s.
Great.
And that's on our website too, CalEITCforme.org. You'll be able to find the text number and all our resources too. But yes, the text line is great, so thanks for following up.
There was a question that says, the dates that are available for the free tax filing services are only available on certain days. Can you clarify that?
Yeah, so certain VITA sites are only open certain days because they do rely on volunteers to staff them. So if the closest VITA site to you, it may only be open on Thursdays at certain times or Tuesdays, and that's just because of the amount of volunteers that the organization providing that service is able to recruit and the times that they're able to staff their VITA center. So if those times don't work for whoever you're trying to help, you may look at the next closest, but that is one of the limitations of VITA, is that not all sites are open all the time. Some have more hours than others, and some have more times than others, and some operate by appointment. And so I believe that there is contact information with some of the locations, and you can maybe call and try, and some of them operate by appointment as well.
Mm-hmm. There's one question that says, is there any way that we can invite these tax preparers to come into campus to assist our students?
So in some cases, yes, you can work with an organization like ours or the United Way, depending on where your college is. We have partnered with certain organizations to set up VITA events on campuses or at other locations. Typically, that planning gets started before the tax season, so maybe for next year we can collaborate in that way. We have certain parts of the state where we are the state's partner for providing VITA services. For us, that's LA County, Riverside County, San Bernardino. And so depending on where you are, we may be able to collaborate with you to get VITA volunteers to your campus. But there is likely also another organization providing VITA services in your area that you may be able to work with to like have a one-time event or even have a VITA site on your campus. And it may be possible to get that set up this year. Just depends. But if you're interested in doing that in the future, it's definitely something that can happen, you know, in the next year if you work with whatever organizations are providing VITA services in your area.
Thank you, Morgan. There was a clarification on work-study students that those earnings are taxable like any other income. So thank you for that, Christine. One question was that, will this webinar and the notes be available? Yes, they'll be available on our website. The link is in the handouts on jbay.org. We will have that in our training archive. There are some other questions here. Let me get to those. There is a question that's a very specific question about a foster youth residing in a home. And Layla, what I will do is I'm going to email you and Jason specifically to answer that specific question with those details. So thank you, Layla, for your question. And I'm just seeing if there's any new questions I have not answered yet. There is one comment that the United Way offers free tax preparation assistance online at myfreetaxes.org as well. So thank you to the United Way folks for providing that opportunity to everyone and that information as well. There's a question about what ages would the youth have to be in foster care to qualify. So actually that's for Eddie. There is no set age that would qualify you. All of the qualifications are based on if you've earned $1 and not more than those income limit thresholds. So you don't have to have been in foster care to benefit from any of these, but why we have emphasized those who are working with youth in foster care is because, like we mentioned, foster care youth are earning on average at age 21 about $8,000. So they would benefit from filing and getting these tax refunds and credits, but they aren't necessarily qualified to. So that's why they need a little bit of assistance in learning about the opportunity and helping file their taxes for the first time. This is a really unique population that may not always have a constant adult supporter to help them with this transition into independence and learning financial health. So that's why we've specifically called out those certain instances of youth in foster care, youth in juvenile hall, young people who are immigrants, and other scenarios. There is a question, Jason, that maybe you can answer is what is the recommended withholding? I have a youth or non-minor dependent that is single but has a withholding of 2. So do you have any thoughts on responding to that, Jason?
I'll go ahead and thank you for that question. I'll go ahead and respond to that one offline. I don't have anything immediate.
Okay, so I'll connect you with the person that asked that question.
Thank you.
And then, yep, and that's all of the questions that we've received for today. So once again, thank you so much to everyone for all of the information you've provided, for everyone on the call who has taken the pledge, for tuning in today, and for helping young people and all people benefit from these credits, and for really just taking a moment to learn about our tax system and and the work that folks have been doing to lift people out of poverty and to support them with their financial health. Again, if you need anything, feel free to contact us on with these emails that are on the slide, and have a great rest of the day. All right. Bye, everybody.
Thank you.
Thanks, everyone.
Thank you. Bye-bye.